Hello traders, in this video I'm going to show you how to use liquidity sweep candlestick using time frame so that you can trade the higher time frame using the lower time frame as your entry point. We will also provide you with some examples when we move forward with this video. I'll try all my best not to gatekeep any information. So let's begin with the video. In this video, you're going to find liquidity leg to be swept using the high or the low in the higher time frame. And then also in the higher time frame, we are going to find candlestick to be used for reversal in the lower time frame. And also we are going to cover retracement area levels. And then in the lower time frame for entry, this higher time frame will only be used for analysis. And then in the lower time frame, we are going to use liquidity sweep with proper analysis, including maybe fair value gap or imbalances. Confirmation candlestick must also sweep the liquidity. You have to understand that this is going to be some sort of a trading strategy, but it's not a full trading strategy. But it's going to help you at least to understand how to trade the market very easily and also to be able to enter the market without any hesitations. So let's begin with the first example over here. We have, let's say, a high around this area, and then we have a higher low, and then we have a higher high here. So in this area is where we will be looking to make some short positions, because price is likely, after making a new higher high, price is likely to reverse to the downside. And also sometimes the market can be complex. Let's say right now you see this lower high, you think maybe this is a break of market structure around this area, and then price shoot to the downside and then start to reverse after breaking this lower low, and then price start to shoot to the upside. So in this case, that means we'll be looking to enter our markets around these areas. And also I want to point out is that sometimes price can do something like this. It can also make this low here. We have this low, and then price break to the downside, breaking this. But here is where you should be looking for price action. Sometimes here you will find only bearish candlesticks around these areas here, and then you will find a bullish candlestick here. That's where you should analyze the bullish candlestick behavior around this area. Even around this area, you should also be looking for a bearish candlestick around this area to trade the market to the downside. Even, let's say we have this low here, and then price breaks it around this area. That means you'll be looking for price action around this area here, and then look for a candlestick that manipulates the previous low. So that means in this area you'll be looking for the market to do something like this, and then you'll be having only bearish candlesticks around this area. But once this bullish candlestick here appear, you have to make sure that it breaks the previous low before it can close bullish. So let's move on to a more practical example or more complex one. So in this area we can literally see that we have HOP price action, but then suddenly the market decide to shoot to the downside. Maybe let's say this is your higher time frame demand zone around this area, and then price shoot below your predicted demand zone, and then price suddenly shoot to the upside. Your analysis was wrong, but your trigger areas was very wrong. You joined the market very early without even waiting. So that means in this area you have to wait for the market to make those manipulations levels before you can enter the market. So you don't have to rush to enter the market, so you have to wait as always. And then in this case we can see that we have a high, Most people will be looking to enter on this area, and then they will put their stop losses above this here. Let's say this is your higher time frame supply zone here. Then most people will be looking to enter short around here. They will eventually, most of the time, they will do something like this. They will find a zone around this area, and then price is likely to shoot to the upside and then hit the stop loss around this area. And then this is where you'll be looking to enter the market. You don't have to trade around this area here. You have to wait for this, because price is likely to do this. If you have noticed, most of the time your trades are always in a stop loss. That's the motivation of this video. This video is going to help you to avoid those stop losses as always. So let's move on to more practical examples of candlestick patterns that we should look for in the market. Here we can see that we have a bearish candlestick. This one is an aggressive bearish candlestick, and then we have this bullish candlestick here. Here we can literally see that we have this low, and then we have this low, and then price closed with a bullish candlestick around this area. So that means from here, this low here, you will wait for price to break this low around these areas here, and then you will wait for price to close bullish. But sometimes you can still have a double confirmation. If you want to do double confirmation, then you have to watch the video till the end so that I can show you the examples of double confirmations. And we can literally see after this bullish candle here, we can see that the market made a bullish candle close, and then the market shoot to the upside. Let's say this is your daily time frame. That means in the lower time frame, you'll be looking to enter longs around this low here. This low will be used to enter long position to the upside. And also, if you enter on this area, when the market moves to the upside, you can still put your trade to break even because price has already manipulated this low here. So price is likely not to come around this areas here. This price point price is not really gonna come until it breaks new highs here. So even if you enter here, let's say maybe you are in the weekly time frame, and then you enter maybe, let's say, on the 4 hours or maybe 1 hour. When the week ends, you'll be looking to close your position around here, because I know most people won't even try to hold a trade for 2 weeks. Okay, so let's move on to another example so that I can show you around this manipulation areas. Here on candlestick pattern 2, we can see that we have a bearish candlestick and then a bullish candlestick. Here we can see that we have a low, and then we have a low here. But price, you can see we have a low around this area, we have a low here. But if we can look clearly at the price action, we can see that this low here and this low here, price broke this low with a bearish candlestick, but this next candlestick is bullish. And also we can see that there was no manipulation before we can see price shoot to the upside. So that means we had this move to the upside, and then we have this move to the upside. What we need here is this high. This high here is this high here. Okay, and then we have this high. So this is the example, and then this is the estimate